Hi, on the previous section we have seen section 1, section 2, section 3 and section 4. So, section 4, charge of income tax. The income tax, when it is to be charged, the income tax to be charged for the year where the income has been accrued, that is income has been gained in the previous year. The income to be charged on what rates? The rate which is being prescribed by the central government. And when it should be paid? It should be paid as a self assessment tax in 4 segment in that year itself, and then such income can be paid in the next year, so that is in the assessment year or a next financial year, through self assessment tax paid. For this, whatever they paid, if you not pay the tax in that financial year itself in the 4 terms, you may be charged to interest under section 234A, 234B, 234C. So these are the provisions you need to understand. So this section will be speaking in the last point, on the point of time when you move on. So this is the basic of charge. So we will read the act. Next act, scope of total income. Subject to the provision of the act, the total income of any previous year who is a resident includes all the income from whether source of derived from. So all the derived income can be considered source of income. Total income contains all the source of income received or deemed to be received in India in such a year on behalf nearby or on behalf of such person. Example, either you can receive such money from this, or received or deemed to be received. Vaangitinga, you got the money or you going to get the money, deemed to receive in India. In India, specifically in India, in such year by or on behalf of such a person. So you are getting that same money on behalf of, for example, your parent is going to receive some money. So on his behalf you are going to get that money, or your wife is going to get that money on her behalf you are getting that money. So her behalf also will come into the total income. Second point, accrues or arise or deemed to accrues or arise in India during such year. So received or deemed to be received. That is one. Second point, accrual concept. For any person, scope of total income deemed to say accrue and arise in India. So example, you have made a fixed deposit FD, and that FD is 5-year FD. You will be receiving this FD interest in the end of 5th year. In this current year, the interest income has been accrued. Whether you are going to charge this FD interest income in this current year or in the later point of time, as clearly said, accrues and arise or deemed to accrue or arise in India. Arise in India, specifically in India. So in this case, the FD interest is not received yet, but it has accrued, and there is a surety, 100% surety, in the end of 5th year, the banking company will repay you the money. Clear? So that income also can be accounted in your books. Section C, accrues or arise to him outside India. Clearly say, he doesn't say received or deemed to be received. Accrue or arise. There is a difference between received or accrue and arise. You are able to generate, not receive, generate some money, that is accrue, or something that has been income on your behalf, that is accrued in outside India. Such income also will come into the part of scope of total income. A section clearly says so. So provision in the case of persons not ordinarily resident in India within the meaning of section 6, subsection 6, subsection of 6, the income which accrue and arise by to him outside India shall not be included unless it is derived from the business controlled in profession set up in India. So now the question comes out, there is a 3 case of residency: resident, ordinary resident, non-resident. So in the case of resident in India, he is being resident in India, he stays in India, he is a resident. Non-resident, ordinary resident. What is it, ordinary resident? He is a resident, but he stay in India, doesn't cross 182 days, and some provisions are there. He doesn't come into that clause, and he is considered as a resident, not ordinary resident. So in that case, what happens? He is not in India. So, and such income which comes outside India, it's not his income unless until such business or profession, business or profession, clearly say business or profession set in control in India, that such a business and profession are being controlled in India, then such income also will be part of his income. Subsection 2 of section 5. Subject to the provision of the total income of any previous year of a person who is a non-resident include all income from wherever source derived is received or deemed to receive in India such year on behalf of the person. Accrue or arise in deemed to accrue arise in India during the period. So I clearly said in the previous video that if the income for a non-resident who comes to India and he is doing some business and earning some income, such income for the non-resident which receive, deemed to receive, accrue or arise, deemed to accrue or deemed to arise in India, such income will be taxable even he is a non-resident in India. Okay. So explanation 1 says the income accrue arising outside India shall not be deemed to be received in India within the meaning of the section by reason only for the fact that is taken into account in a balance sheet prepared in India. So explanation 2, explanation 1, income accrue arising in India shall not be deemed to receive in India within the meaning of section only the fact is taken into account in the balance sheet prepared in India. Okay. Second, the removal of the doubts is thereby declare the income which has been included in total income of a person on the basis of its accrued or arisen or deemed to have accrued or arisen to him shall not be again so included the basis of received or deemed to be received in India. Example, that is a problem. I said on the case when interest income has been accrued in the financial year of the first year, I am receiving the FD, matured FD, I am receiving the principal and along with the interest in the 5th year. Rather, I need to, on the first year need to pay tax, and the 5th year do I need to pay the tax? That's a question right now. No, you don't need to pay the tax because every year you will be able to getting the interest, such interest will be taxed in that perspective. What taxed income which you received in the 5th year or any part of the year, such income is not taxable because once it taxed, you need not to double tax it. The section 5A is on the Portuguese civil rule. It's not totally, it's not totally required. So rather, if you want, we can speak, but Portuguese we don't need to do. That's I don't care about it. So come to this resident in India. That's a very super point. Resident, who is a resident, who is a non-resident, we can see. Section 6. Section 6 says resident in India. Individuals should be resident in India in the previous year if India in that year for a period amounting to 180 days. 82 days or more. So he is a resident in India 82 days if he is there resident in India. Within the 4 previous year in India for a period amounting to all the 365 or more days. In this cumulative of 4 period, he should be there 365 days. Okay. Is in India for a period amounting to 60 days or more. Same time, in every year he should be 60 days. Cumulative conditions. First point, he should be 182 days. If he stay in India, he is a become resident. Second, he stays in India for the last 4 years, cumulative crossing 365. And clearly say the 4 previous year, every year his stay should be minimum 60 days. If it been there, he is a resident. Being a citizen of India who leaves India is any previous year as a member of the crew of Indian ship is defined in section clause 18 of the section 3 of merchant Banking Shipping Act 1958, the purpose of employment outside India, the provision subclause C shall be applied in relation to that year, saying 60 days, occurring within the word 182 days, has been substituted. So, for the explanation subsection 1, there has been the person who want to be resident. I have clearly said the resident status for the person who are working as a merchant shipping under the Merchant Shipping Act 1958, using the ship and going outside India for a kind of business. For them, that 182 days won't hold them. For them, 60 days will be applicable for them. 60 days. If they stays in India for 60 days, they will be considered as an Indian citizen, resident Indian citizens. Okay, being an Indian citizen or being a person or Indian origin within a meaning explanation to the clause section 115C, who being outside India comes on a visit to India in a previous year, and provision of subclause C shall apply to relation to that year as if the word 60 days occurred then to 182 days has been substituted. So he is an Indian citizen, but a person of Indian origin. For them, a person under section 115 BC, 116C, being he is outside India, he visits India. For them, the 60 days limit is there. He comes to India, and every year he there for 60 days, and the cumulative of 4 years, if he is in 60 days, he will be considered as a resident. Such clause has been, that's not apply for them. For them, 60 days will be substituted for 182 days. 182 days. Okay. So explanation 2 clearly says, for the purpose of the clause, in any case of the individual being a citizen of India and member of the crew of a foreign boat, ship leaving India, the period in stay in India shall in respect of such voyage be determined in the manner of the subject to such condition as may be pronounced. Super. And a Hindu under the family, a firm or other association of AOP is said to be a resident in India in any previous year, any case except when during the year the control and management of the affairs is situated wholly outside India. Okay. HUF, firm or AOP. Consider these 3 things. In this, the control, that means control and the management. Control and management anywhere during the year has been shifted wholly outside India. They are not being a resident in that financial, any person or all the person, control is totally shifted, then it won't be considered as a resident for AOP. A company is said to be resident in India in the previous year if it is an Indian company. It's an Indian company, it's an Indian resident. Its place effective of management in India. If it is a company which is registered outside India, who have a branch in India, who have a place effective management in India, which have control over India, effective management, a place of effective management. They didn't mention control. Effective place of effective management in India in that year, then such a company is Indian company, so it's deemed to be Indian company. Explanation for the place of effective management means a place where key management and commercial decisions that are necessary for the conduct of business of the whole of the entity or on whole or substance made. Okay, so 2 things they said, key management and commercial decision. If the 2 things are being managed here and totally they can solve the issues, they can do their own business with the commercial decisions, they can make buying, selling activities, they can make a decision, key decision has been made, then that business, that company, whichever has a foreign company who have a branch in India, it will consider as an Indian company. Every other person is said to be a resident in India in any previous year in the case except where during that year the control and management of affairs is situated wholly outside India. So the same thing of HUF, firms and AOP applies here. If a person is a resident in India in a previous year relevant to the assessment year is respect to any source of income, he shall be deemed to be resident in India in the previous year relevant to the assessment year in which such respect to each of such other source of income. Okay, A person is resident in India, okay, in the previous year, relevant to the assessment year, respect of any source of income shall be deemed to be resident in India. And the previous year, respect of such of the other source of income, okay. The same thing, he has received income, other income also will be form of total income. So he received only other source of income also, and he is a resident in India. His in previous year income will be relevant to the assessment in respect of such a source of income. He shall be deemed to be resident in India in the previous year, relevant to the assessment year in which of the assessment year. Okay, I said previously, we have an income, that income we received in the previous year, it other source of income, and he doesn't know to come to India in the next year. Can the government can deduct tax in that period or next year assessment year? That is a problem here. That has been correlated here. It's not totally, but correlated. A person is said to be non-ordinary resident in India in any previous year if such person is an individual who has been a non-resident in India 9 out of 10 years. He's been 9 out of 10 years he is non-resident, or has been during the 7 previous year year has been in India for period amounting to 729 days, 729 days or less. Clearly, a person is an individual said to be non-resident in India, not ordinary resident. Or if he is a non-resident, out of the 10 years, 9 years he is a non-resident, he stays in India, is less, so he is not a resident. Second time, if a person is not in the 10th year, so in the past 7 years, if you calculate, the total cumulative stay in India doesn't cross 729 days. A Hindu individual family whose manager has been non-resident in India in 9 out of 10 previous year preceding that year, or during the 7 previous year that has been in India for the period are not amounted 729 days. So in a Hindu phenomenon, it don't comes under non-ordinary resident, considered as a non-resident. Okay. So these are the points we have seen for the residential status. So I have understood something. If you have doubts, call me. You can speak out. Bye.